Hey, Dr. Bob Flower, and the Master Pattern Report returns. You should be getting a notice that by overwhelming popular demand, a lot of people have contacted us and say, such a great thing, Bob, we enjoyed it. Um, you know, bring it back. And we are. We're going to have a weekly show as we had in the past, and we're going to try and give you as much help. I think what we're going to do this time is, while we're still going to work on dates, call dates, um, we're going to try and work on some select stocks for you to purchase. Uh, Although what I like to do is, I don't like to day trade or week trade, unless things work out well. Um, I like to do a little longer term, like 3, 5 months, 6 months down the road, maybe even a year. The hell, if we can get a stock to go up 15-20% a year, that's pretty good, especially if you're doing options. So here we go. But last week we did have a couple of more calls. We talked about the 23rd, and it occurred on the 22nd. We had actually the oil call on the 23rd was right on target. The silver call was a day early. We had about a 4.5% swing in silver down. By the way, we think that we're going to start seeing the metals move very soon, within the next 2 weeks. It looks like. Next week we're looking at June 5th as a major move day for gold and silver and the metals. And oil. The market is weakening. There's no two ways about it. We'll run up a little bit more here, but we think that June will also be a pullback month, and we're looking for something. For instance, in the Nikkei is going to be somewhere around at 33.44, 33.44. Nasdaq, I'm sorry, I said the Nikkei. The Nasdaq, around that 33.44. We're looking for a pullback down to that level within the next 2 weeks, perhaps. So keep that in mind. What I did want to say about the Nikkei was this. Last Thursday, we saw the Nikkei drop 7% in one day, and that was in response to something we've been telling you about for a while now, and that was in response to Bernanke and the Feds talking about pulling back on QE infinity, right? And that scared the living hell out of the markets, especially the foreign markets, but also the U.S. market. And we've been saying right along, people are saying, look at this crazy market, how could it be things are not looking good for employment and whatnot, and people don't have money and they're still suffering. Well, and again, the answer is very simple. As long as the Fed keeps pumping billions of dollars each month, I guess 40 billion a month, into the market, you're going to see a strong run up. The minute it stops, you're going to see a strong rundown, even greater than the run up, and that is coming. You could see the hints are already in the air. So when we think by the end of the year, the only issue here is how bad things get as compared to the election year, which is next year, midterm election year, and there's going to be tremendous pressure on the Fed to continue with the low interest rate, and that's why they said originally 2014 they're going to keep the rates low through 2014, and QE infinity will continue. However, what's happening now is getting to the serious point. Up until this point, and listen to this now, up until this point, the U.S. Treasury has given $1 trillion foreign banks. $1 trillion to foreign banks. Folks, there's a reason for that. And it's called depression. Okay? These banks have taken such a hit from the 2008 depression that they still can't recover. All right? So keep that in mind when it comes time to start paying off the bills. And God help the world when the time comes for a new president and there is open inspection and investigation into the books of the Federal Reserve. This is reality, folks. These are things that are bound to come out. No two ways about it. It's just a question of when. How bad it's going to be, I'll leave that up to your imagination, but we know it's not going to be good. Okay? And this whole practice, I mean, everything that's going on in our economy is false. It's based on the government pouring more and more money in, and in order for the government to pour more and more money in, they're running more and more deficits, and they're raising more and more taxes. Now, couple this with the health care mess that's going on, and you are going to be in very serious financial trouble going forward. I mean, look, it's common sense. I don't care whether you're a Democrat or a Republican, a conservative or a liberal. I mean, this is the way it is. Let's be honest. I mean, and that's what we have to do. We have to be not only honest, but we have to be concerned about what's going on, regardless of what we're doing. Okay? So now we have an issue where things are getting better. Okay? You know, unemployment is still not where it should be, and there are better profits with some companies. Other companies are not doing as well as everybody thought, major companies. So what do we expect? Well, again, we expect that it's going to be a rough summer, and we think that towards the last quarter of the year things will be much better, if not in reality, at least in appearance sake, because of the upcoming midterm elections. Right? The other thing that we have to be concerned about, and you know, I often talk about real estate because that's been my field, real estate investing and finance, venture capital, that type of stuff. But we're starting to see some active growth in the real estate market. Okay, and I know I've been telling you now's a good time to buy. Now's a good time to buy a home, for instance, or a second home. Don't speculate, because this market can fall just as easy, if not easier, than the way it's rising. And if they start running up prices, and I'm talking about the industry and the government, we're only going to repeat the disaster that we had, and we will never recover. Right? So you're going to buy a home, do it now. You can't find a better time. You're going to buy a second home, do it now. It's even better market. The second home, the vacation home market. Okay, do it now. However, don't spec. Don't speculate. You're on thin ice right now, and you know, unless you've been doing this, or unless you're going in with a pro who knows what he's doing and you trust him, you know, like your brother or your mother or your sister or somebody like that, try and stay away from them right now, because the prices are starting to get a little sketchy in some markets, and you might be seeing too quick a run up, and you might see too many amateurs running in to invest in the market. Okay, so be aware of those things as much as you can, because that's a key as to what's going to happen near term. And that's exactly what happened in 2005 and 2006. That's how we knew that things were coming in 2007. In those times when people were bidding for houses and we said, no, we're in for trouble, and people said, nah, you're a skeptic, you're old-fashioned and everything else. I got my money and I've got my real estate nice and safe, so it all depends on your priorities, who you listen to, okay, and what you believe. Okay, so we'll be back to you next week, and we're going to reactivate the master pattern, as well as our achievement forum, which you may or may not be receiving. And we hope you're enjoying it, and we'll hope that if you have any questions, that you send them to us at masterpattern.net. Okay, www.masterpattern.net. Thank you for listening in, and good to be back on a full-time basis with you. See you next week.